Right, what a reversal. And no, I'm not talking about the Arkansas defense, which failed to fall on the ball after it blocked a punt, and then handed it over to the offense, who then promptly threw an interception and lost the game. I could be talking about that reversal, but I'm not. I'm talking about the one at Lululemon Athletica, symbol LULU. Wow, that has been nothing short of breathtaking this morning. The stock, which got whacked the other day for about $6 a share, actually flushed down about $2 on the open, traded down to about $65.40 or so, only to then rally about $5 up to $69.20. It's sold off a little bit, it's given back a little bit of those gains, but I have to say, being short 65-60 put spreads in both January and February, are having our cushion back in place sure feels a lot better. Jim Cramer says that sometimes to make money, especially in markets like this, the thing that you need most is courage. And I have to say, after yesterday, some of the spreads that we sold, it sure felt that way. We did sell some more Deckers. I know our love affair with Deckers continues. We sold a few Deckers spreads again this morning. Had basically the same trading action as Lululemon. Deckers is up $1.70 as of right now. It's kind of amazing. The stock is back above the $80 level. We did leave some of those short 80, 75 put spreads on it that expire in January in our futile attempt to try and take in some money in January without rolling it all out to February. It does pay to be patient. So discipline said we did about 50, well, we probably did about 80-20. We rolled about 80% of the position out, down and out to the February 75-70 put spreads, and then we are still short some January 80-75 in Deckers. On Lululemon, remember the levels are 65-60 put spreads. We're short January and February. Lululemon, LULU, 65-60 put spreads. All right. Speaking of volatility, yesterday we also doubled down on both our VIX long 1821 February call spreads and our long SPY 125 120 put spreads. We've just taken in so much money in the first few days of this year that it was just prudent to spend some of that on hedges. It's not sexy. It's unfortunately our biggest loss, usually every year, are our hedges, but it's the cost of doing business, right? I think Joe Terranova says you buy protection when you need it, you buy protection when you can, not when you need it, because by the time you need it, right, when the house is already burning, it's a little late. Okay, GDXJ. Gold's getting a little bit of a bounce here, but honestly, the GDXJ is still down 1%. We'll check it in. Yeah, it's down 39.5 cents. It's about 1%, just over 1%. Look, we have been big advocates of keeping your gold position small, and we're going to continue on that path. Gold is a wild ride, that's to be sure. Guy Adami, when we had him on our America's Favorite Traders interview, if you have not caught that, feel free to log into iTunes. You can type in Magnum Opus Financial, do a search. There should be 8 episodes of America's Favorite Traders. You can also go straight to www.magnumopusfinancial.com. There's a big button right there in the middle of the screen on the left-hand side that's got Patty Edwards, James Altucher, and Jared Levy's face on there. Click on the button. You can select from any of the 8 episodes you want. You can either listen right there on the web page, you can download it in MP3 format for whatever mobile device you can, or you can click the link to go to iTunes. It'll take you right to the iTunes page where you can download the free episode or listen on iTunes. So check it out. Guy likes to say gold takes the stairs up and the elevator down. There is just so much hot money in gold that even though I love Jim Cramer's fundamental argument in terms of supply and demand, love that. In fact, that's really the only reason why we own the GDXJ, because the only really safe way to get more gold in the ground is to go buy a company that owns more ground. Okay, so that's why we think the junior gold miners are acquisition targets. There's clearly a love affair right now with people owning gold as an investment vehicle. So we have a small position, I guess, just to say that we didn't miss it. But to be honest with you, I feel much more comfortable with other sectors right now. I mean, cloud. Look at today's upgrade on Salesforce.com. Right, Joe Terranova on the Fast Money Halftime today is looking for a $150 price target in gold. We are long the January 130, 135 call spreads, which are now way in the money with the stock trading at 141. That's a great name. We're also short the 120, 115 put spreads on Salesforce.com if you've been following us. Hopefully you've made money both ways, being long the call spreads and short the put spreads. It's a terrific name. Love to hear from Benioff. He's a fantastic CEO. Anytime you get a chance to be on that Carmen's call, I think that's what really tells the Salesforce.com story better than anything else. Okay, other name, Molycorp, MCP. Now, you're probably laughing right now, right? We're avoiding gold because of the risk that's in gold, but we're in the rare earths. Yeah, well, that's how we roll over here, right? You can buy the completely in the money January or February 50-55 call spread on Molycorp, MCP, both for under $4. If you give me a sec, I can check in on the real-time position right now. Okay, the Februaries are selling for $320, and the Januaries are selling for $375. Anything above $375, and we probably say, wait till next month, or go out to the next month. But the 50-55 call spread completely in the money, right? The stock's trading at about $61 and change right now. It's down 1% today, which is why we're bringing it to you. We don't like to buy things when they're up. We'd rather buy it when they're down. The stock is actually down close to 2% right now. It's down over $1 to $60.70. I do like that trade. Why? Well, let's say you spend $320 on the February 50-55. Your break even is with the stock at $53.20, which is way, a better than a 10% decline before you even get in trouble on the stock. Okay, the stock could decline $6, and you'd still have intrinsic value in that long call spread. So we do feel uncomfortable getting outright long something like Molycorp, because that is, right, if you're pregnant or nursing, please choose another ride at the amusement park. This is, right, we like to say you have to have a little hair on your chest in order to put this trade on. But MCP, completely in the money, long 50-55 call spread. We like it. That means you're long the 50, you're short the 55 against it. You're going to pay $320 for the one in February. You basically just sit around and wait for time value and volatility to come out of the options prices. You're going to have a nice clean $5 spread, right? Do the math. 3.2 divided by 5 should give you a great rate of return. I'll let you guys do the math on that. Then you just sit and wait till options expiration comes by. The reason the January one is more is because obviously with only how many days are left, right? We're waiting until the 21st is when January options expiration is. Drum roll, there are only 17 days left until options expiration, so you have to pay a little bit more for that spread, but you can probably still make a buck, right? And obviously, being that the time frame is shorter, it's more likely that you'll be right. You can take in that money. Okay, so either the January or the February, we'll leave it up to you. We're actually long both from lower levels. Talk with your broker about how those long call spreads will be handled. Please make sure you have that discussion so that you don't end up being long a bunch of stock, even though you wanted to be called away at the next higher strike. So please talk to your broker. All right, have some courage. Don't forget to watch your screens. There's quite a bit going on under the hood, even though the overall markets are only moving about 0.5%. Okay, but actually 0.5% a day. It's a pretty big move. Thanks for joining us again today. Have a great day, and we'll see you tomorrow.